Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and how the stock price could surge up to around $8. Right now it's trading at around $5 to $6, but professional analysts as well as some financial advisors believe that the company is going to make a huge comeback in their stock price in the next 12 months. Now, I personally think that the stock price is going to start increasing and rallying as we get closer to the end of the student loan moratorium, which we will talk about in more detail at the very end of the video to see what Sofi's CEO actually had to say about the student loan moratorium extension and how he is actually very excited. So apart from going over the latest stock price targets and stock price predictions, we are also going to be talking about the latest news updates to where we will be diving into some technical analysis. We'll be talking about risk management and the proper way to build a high-performing stock portfolio. And as usual, if you want to know what stocks I am buying right now or the stocks I have in my personal portfolio, along with a lot of other perks including getting videos early, go and click that join button next to the subscribe button for a fun way to support the channel. But without further ado, let's just jump right into today's stories. So the first article that we are going to analyze is why Sofi Technologies, ticker symbol SOFI, is a good buy at $6 or below. Is this company actually worth your money? Well, analysts and other stock professionals say a resounding yes. Out of 13 analysts who currently cover Sofi Technologies, they have all given a 12-month stock price target for this company, which ranges anywhere between $7 and $11. And like I said earlier, the current stock price is trading between $5 and $6 right now, while the bigger institutions who are reporting on Sofi actually believe they have an $8 price target, which would give us around or above a 25% upside potential just in the next year. Now, this may not seem impressive to you, but it honestly should, because why? Well, first I want to point out that 90% of funds underperform the overall market and 99% of retail investors underperform the market. And why am I saying that? Well, the reason being is the market on average returns anywhere from 8 to 10%, and if 99% of traders and stock investors in a retail perspective are trading at less than 10 to 8%, clearly a 25% increase in the next year is going to be fantastic. But I think that Sofi Technologies' true growth potential is going to be realized in the year of 2024 onward, giving us a way larger increase than just 25%, because from then onward, the company is supposed to be a profitable company. I also want to mention, according to FactSet research, the data shows that 13 brokerages have issued ratings for Sofi Technologies, where none of these brokerages say to sell the company, none of them say the company is overweight, and 8 analysts from these brokerages actually give Sofi Technologies a buy rating, while the other remaining 5 analysts say to at least hold the company for a long-term position. And overall, that gives us a moderate buy rating according to stock professionals for Sofi Technologies. Now, of course, we should always take price targets and price predictions and even analysts' advice with a giant grain of salt, because analysts can clearly be wrong. Instead, we should use this as a general guide for our portfolios to manage our future expectations of the stock appreciation and the stock price growth that we could get from Sofi Technologies. Like I said earlier, the average price target among very well-respected institutions such as Morgan Stanley, Credit Suisse, and Mizuho is around $8 per share. But if we look at Sofi Technologies from a technical analysis standpoint, we can see there are far more reasons to buy the company than there is to hold and sell. Now, I'm not going to go into too much detail regarding the analysis of this company, but according to technical analysis, we have 10 reasons to buy the company, 9 reasons to remain neutral, and 7 reasons to sell the company. So that is overall pretty positive. However, over the last week and even the last couple of months, we have seen great downward momentum in the Sofi stock price, and I have released a multitude of videos telling people why the Sofi stock price would crash and why it is set to continuously crash until it finds a support level or a bottom where it can actually start to rebound. Now, the reason for this downward momentum is mainly due to macroeconomic factors, not necessarily anything in the company itself. And as we will hear from their chief executive officer named Anthony Noto, we also know that he believes Sofi Technologies is a very strong company and he continuously buys shares. Not long ago, he was interviewed by Yahoo Finance, and I would highly recommend you all go in the description of this video, go under sources and click this particular link so you can watch that video, because I think he does an excellent job explaining how strong Sofi Technologies is fundamentally, even during this very negative environment. However, I'm going to highlight a few things that he said from the video's transcript so I can tell you all why I personally am very bullish on Sofi Technologies. Now, before we get into the transcript, I want to tell you that Anthony Noto, as well as myself, we invest the same, in a sense of we both love diversified portfolios. We think investing for the long term is the proper way to build wealth, and while the economic environment is negative and we are seeing volatility due to the economy being recessionary or even a potential stock market crash, right now is the best time to invest into high growth companies or just companies in general. I also want to make sure that you all have a very solid core to your portfolio before you start adding very risky singular stocks such as Palantir Technologies, Sofi Technologies, and other companies like that. Your core portfolio should make up either 50% or more of your overall portfolio, which is why I have a current risk management policy that doesn't allow me to invest initially into a single growth company more than 5%, because it prevents me from taking on unnecessary risk of overexposure. This is why my portfolios and the stocks that I buy actually perform very well during times of stock market uncertainty, because I'm getting dividends and cash flows from them, as well as they are maintaining and retaining my overall portfolio value. If you are in the red right now and your portfolio is negative, it may be because you don't have proper risk management policies in place. So if you want more information on that, you can reach me in the comments down below, or you can become a member of this channel by hitting that join button and that subscribe button, which are right next to each other, so I can teach you how to manage your risk properly to build long-term wealth. But without further ado, let's jump right in to see what Anthony Noto says about Sofi Technologies. He starts off by saying that he likes Sofi Technologies as a business because they are a very diverse business, and they have to be a one-stop shop for everyone's financial needs in terms of financial services and financial products that they offer. For instance, they offer a plethora of different types of loans, whether that be personal loans, home loans, student loan refinancing, or auto loans, and that would all be under borrowing. They also have a huge investing segment, and their checking and savings accounts are extremely competitive, which yield their investors 2% interest per year, and this is positive interest. So literally, they will pay you a 2% interest rate just to have a checking and savings account with them, which means that if you keep $100,000 in your Sofi checking or savings account, they are going to be paying you $2,000 just to have an account with them, which is absolutely amazing. They also offer and give the ability to their customers and consumers to invest into stocks on a fractional basis by offering them fractional shares. And if you don't know what a fractional share is, I would highly recommend you look into that, or at least get a brokerage that offers fractional shares or the ability for you to invest into share slices. This means if the company has a stock price of $1,000, you don't need to spend $1,000 to buy a complete share. You can buy a fraction of that share for as low as just $1. So if you're not working with a lot of capital and you can't afford an entire share, look into fractional shares or fractional investing or share slices so you can locate a brokerage that does this so you can invest into the companies that you want to. And of course, Sofi Technologies offers fractional shares without commissions. They also offer a lot of different cryptocurrencies along with their own proprietary ETFs. Now, I love ETFs. More than 50% of my portfolio, which is my core investment, are in ETFs that hold strong, high-performing, blue-chip stocks that also give me free cash flow in the form of dividends. And lastly, they also offer robo-advisory, which I personally don't use because I think I am much better off myself doing my own analysis instead of relying on a robot that, in my opinion, is not that effective. The CEO of Sofi goes on to say, the demand for their financial services in particular and their financial products have gone up and increased extremely aggressively despite the volatility that we are finding right now in a negative macroeconomic environment with rising interest rates and rising inflation rates. This is why the CEO actually tells investors and just regular people like you and I to focus on reducing our debts and refinancing any debt with a variable rate, because as interest rates increase, that variable rate is also going to increase. So we want a fixed rate that is much cheaper than the variable rate that we may have on our debt right now. He also wants us to have discretionary income and a passive income in the forms of dividends from other investments, and he also encourages investors to keep investing in volatile markets, and that's something that I really want to stress. Keep keep investing no matter what the stock market is doing. And I 100% agree with him. Yes, you should continuously invest regardless of what the stock market is doing, especially if you're investing into an index fund or a mutual fund or an ETF that tracks an index, such as VOO, which is one of my personal favorite ETFs. And I think that is a fantastic core investment that more people should pay attention to. Another good one is VTI. Again, these have very low expense ratios. One tracks the overall stock market and the other one tracks the S&P 500, and that one would be VOO. The CEO of SoFi goes on to say that the biggest mistake an investor could make is stop investing while the stock market is falling, especially through various market cycles and while maintaining a diversified portfolio. And the best way to invest, in his opinion, is dollar cost averaging, and I would 100% agree. If you dollar cost average into ETFs such as VTI or VOO, regardless about what the overall stock market is doing, you are going to build wealth over the long term. So clearly, the CEO advocates for the exact type of investing that I advocate for. He also uses the stock market volatility to lower his average costs for his favorite stocks. An example of this is, a lot of investors don't want to invest while the stock market is falling because they are afraid that they are losing money, which is only half true. They are only losing money on paper. They haven't actually lost anything until they liquidate their investments. Imagine you go to your favorite store and you see that everything is fairly priced. Now let's pretend you walk into your favorite store the very next day and everything is discounted. Clearly, you would want to buy even more products from your favorite store, and that's exactly how I view the stock market. I want to go into my favorite store and see major discounts on all of the companies and the stocks that I regularly buy, which of course for me are blue chip stocks that give me a dividend that are also high growth. But where does Sofi Technologies come into play here? Over the last 5 quarters, the company has grown over a 30% CAGR, which is their compounding annual growth rate, which is absolutely phenomenal. And they actually set a record for the revenue growth in the second quarter, according to the results, which has been mainly driven by their personal loan segment. The reason why their personal loans absolutely skyrocketed despite a very high interest rate economy, because remember, while other fintech companies and other banks and their overall originations for personal loans and various other loan products are decreasing because of higher interest rates, Sofi Technologies has actually seen an increase in these loans because people are using this money from personal loans to pay off high credit card debt because the interest rate is clearly higher for a credit card than it would be for a personal loan. If you are practicing proper risk management, you should have 3 to 6 months worth of expenses in a savings account that is high yielding. And remember, this needs to be done before someone even needs to start investing. After they have that emergency fund, then they can start investing into a 401k or an IRA or any type of tax advantaged account. And then after that, you want to build a very diversified portfolio with high growth blue chip dividend stocks to where you are generating passive income, stock price appreciation, and diversification, which is not only going to maintain your current value of your portfolio and build wealth over the long term, but it's also going to give you a fantastic way to continuously make money even after you stop investing. For instance, if your portfolio is deeply in the red right now, it's probably because you are not practicing proper risk management, because here on YouTube, I respond to people in the comments that are literally willing to go all in on 1, 2, or 3 stocks, and they think that's how you invest, and that is not how you invest. That is literally gambling. You might as well go to a casino. Why would I only want to invest into 3 good companies when I could invest into 20 high-performing growth companies that also give me passive income in the form of dividends? It literally makes no sense. The 3 companies are going to be way more volatile, and if any of them don't work out, I'm going to lose a third of my overall portfolio. For instance, if one of the companies of my 20 companies don't work out, I'm only going to lose 1/20th of my overall portfolio, and even if that company is doing poorly, I am still getting active income in the form of passive income through their dividends that they are offering. So overall, I think Sofi Technologies, over the next 3 months, it's going to be very bumpy, but past that, I think the company is going to find a bottom and absolutely slingshot up in price. Some naysayers think that the student loan moratorium and the student loan forgiveness that the Biden administration is trying to push through is negative for Sofi Technologies, but it's really not. Remember that the majority of their student loan refinances are for various individuals who make above $160,000, or at least that's their average income for a person who has refinanced their loans with Sofi Technologies, which means they wouldn't even qualify for the forgiveness that the Biden administration is trying to give to people. Because remember, if you're single and you make over $125,000, you can't get that $10,000 worth of forgiveness, and if you're filing joint jointly, if you make $250,000 or more, you also won't be eligible. So Sofi Technologies really isn't going to be impacted by this, and I anticipate that the stock price will skyrocket once the company finds a bottom. But until then, we could see the stock price and the pain continue in the stock market because of negative macroeconomic factors such as unimpressive job claims, higher interest rates, and higher inflation rates. But we are just going to have to see. For more videos like this one, or if you want to become a member, remember to go and smash that like button right now, comment your thoughts down below, and I will see you in the next YT video.